Thank you guys who subscribed to the channel. We officially passed 1,000 subscribers. Now we are on our way to 5,000 or 10,000 subscribers as we all grow. So this video is going to be an eye-opener to you guys who are struggling with trading, and some of you guys who have been asking me to do a video specifically for you guys who are struggling with trading. This is how I would learn to trade Forex if I was to start from the beginning. Now, I have gone through all of the things that you guys are going through, and I know that it is really difficult for you to make it in the Forex market as a beginner or as somebody who is struggling to make it in the beginning. All right, so most of the people, when they come into trading, just as myself, we think that, okay, I've started trading, so in a month or 2 months I am going to be in Bali for a holiday. I'm going to be traveling. I'm going to Pretoria, I'm going to Johannesburg or Cape Town, I'm going to Lagos for a holiday, I'm going to Nairobi or Mombasa for a holiday, I'm going to Seychelles Islands for holiday, or I'm going to buy my dream car, my dream watch, or whatever. You get those thoughts. Now, there is nothing wrong with that. I know some people say you shouldn't be dreaming like that when you're a new trader, but that is one of the things that forms a trader. We all come into the market to make money and become financially free. So don't be ashamed of having such dreams as a beginner. But before I continue, give this video a thumbs up. It will let the YouTube algorithm know that you guys are actually enjoying the content, and also give a subscription. Subscribe below. It is just free of charge for you to subscribe, but it goes a long way to support the channel. So without taking so much time, let me take you guys through what I would do to become a profitable trader if I was to begin trading once again, or if I was to learn how to trade again from scratch. Now, number one, what I would do to become a profitable trader or to learn how to trade as a beginner if I was to go backwards is I would learn that trading involves many types of analysis. That is the first thing I would learn. Most of us, when we come into trading, we are mostly glued onto the technicals. Now, many traders go wrong when they glue themselves so much onto the technicals, learning how to draw support and resistance, learning how to find supply and demand zones or order blocks or whatever you want to call them, okay? We are glued so much onto the charts, want to look for chart patterns, candlestick formations, and all that. Now, there's nothing wrong with that, but that alone will make your trading harder as a beginner. So if I was to learn as a beginning trader, what I would do is I would look at analyzing the market from all the aspects of analyzing that the market allows us to do. What do I mean? I mean that when you come into trading as a beginner, you must involve yourself in all aspects of analyzing the market from a technical point of view. That is what you see on the charts, the trend lines, the support resistance lines, and all that kind of stuff. And then you also have to familiarize yourself with the fundamentals of the market. What drives the market fundamentally? The news releases, okay? The CPI, the PPI, the PMI, okay? The consumer confidence, those things, interest rate decisions, meetings, central bank meetings, okay? Some of those things, economic indicators, that's what you have to look at in terms of the fundamentals. And not only looking at the economic indicators that are released on popular news websites like investing.com, Forex Factory. Don't look at only that. In fundamental analysis, there are so many things. You have to really dig deep and find out how the economy of the country is doing. Is that a country involved in a geopolitical situations like wars? Is it involved in natural disasters like earthquakes? Okay, is there a pandemic? Is there a disease affecting that country? Okay, so those are the fundamentals. The fundamentals really look at the macro and microeconomics of a country, and that is what drives the market. Technical analysis is just a display of the fundamental driving factors within the market. The fundamentals are the ones that actually drive the market. When you draw a support level, don't think that that support level is what is actually causing the price to bounce on it and then reverse to go on a buy trend or a bullish trend. Don't ever think like that, okay? That level is being respected based on the fundamental driving factors behind the technicals. So you have to learn to involve yourself in all of the analysis, technical analysis, fundamental analysis, sentiment analysis, okay? You have to also look at the sentiment of the market. Where are the sellers comfortable selling their assets? And where are the buyers comfortable buying their assets, okay? So look at the fundamentals, technicals, and sentiments. Analyze the market as a whole. Don't only look at the technical part of the market. Because if you look at only the technical part of the market, you will take, for example, a buy trade on Euro USD or GBP USD, not knowing that on that day there's a news release on the pound or on the dollar, and when you take your trade and the news comes out negative against your trade, it will reverse without even reaching a support or resistance level, okay? So look at all of the forms of analysis. You can check my channel. I have a video detailing some of those forms of analysis that you can learn from. The second thing that I would do is risk management. You've heard many people talk about risk management, but guys, it dawned on me when I lost a lot of money that this risk management is the key. It is the key. There is no replacement for risk management, okay? Risk management in trading is like buying insurance for your assets or for your house or for your car or for something like that, that if anything happens to it, you are insured. So the insurance that you have in the Forex market is risk management. Now, what is risk management, you may ask? Risk management is when you look at what you are going to lose or what you're going to gain when you take a position in the market or when you buy or sell within the market. How much are you going to lose or gain when you place a trade within the market? That is the risk management structure. When you're going to place a trade, you must know exactly how much you are risking. Are you risking 1%, 2%, 5%, 10% of your capital or of your equity? Or are you just going to blindly place a trade? Now, what happened to me was that in the beginning, when I started trading, I would just take trades using random lot sizes without knowing what percentage of the account I am risking. And that caused me to go into insane profits for a very short time, and the market would reverse and wipe my account, and I would actually blow the account, look for more money, deposit, do the same thing, until it dawned on me that I really need to calculate or really on down and calculate my risk per trade before I take the trade, so that I know what I am going to lose before I place the trade, or I know exactly what my wins will be or returns will be if the trade goes in my favor. So risk management is key. When you're trading Forex, the rule of thumb that most of the traders follow, most of the professional traders follow, is you must risk at least 1 to 2% of your account. The maximum risk that is really allowed professionally is 3%. I've seen some people go up to 5%, which is fine if you really have a good strategy that has at least a 50% strike rate or win rate. You can do a 5% risk per trade, but the rule of thumb is risk between 1% to 3% of your account to protect your equity, so that you have longevity within the market for you to be able to come back and trade another day in case you have a losing streak. For example, there are so many uncertainties in the market. Something can happen randomly in the market, like a country can go to war randomly without informing you. You wake up one morning, there's a war going on in a country, okay? What will happen is that that country's going to war will affect that currency negatively or positively, depending on the outcomes of the war. So there are so many uncertainties. That is why you must always know what you are willing to lose or willing to win when you are placing a trade. So I'll talk about risk management more in another video, but that is the second thing that I would do if I was to learn how to trade again. The third thing that I would go for that is related to risk management is risk to reward ratios. I used to just trade randomly and close trades randomly without knowing what my rewards are. But from the time I realized that you need to at least aim for a 1 to 2 risk to reward ratio within your trading in order for you to succeed or become profitable over a long period of time. You know, it takes, for example, if you're risking 5% per trade on a $100 account, it takes 20 trades for you to lose the entire account if you go negative, or if the trades lose in a row, 20 trades in a row. It takes 20 trades in a row for you to lose your $100 or $1,000. It will take 20 trades for you to lose if you're risking $50 per trade, which is 5%. Okay. In the light of that, But what you need to do always is try to risk with a risk to reward ratio of 1 to 2, so that even if you lose, say, 5 trades in a row, when you come and win one trade brings back 2 of those trades. For example, if you take 10 trades, a sample size of 10 trades, you only need to win 5 trades and lose 5 trades, okay, for it to be profitable. You just need a 50-50 for it to be profitable generally. So that's the third thing that I would really consider if I was to learn to trade again. Now, the other thing, the fourth thing, is withdrawing profits. Now, this is a funny one because most of the time in my videos I talk about withdrawing profits, and people are like, what do you mean by withdrawing profits? Now, when you make money in the forex market, don't leave it there, guys. Don't leave it there. At least withdraw that money on the weekend, on Friday. Try to withdraw that money on Friday and use it to do some things, solve some of the issues you have. Okay, withdraw it, go out and do something, buy yourself a nice shirt, buy anything, a perfume, a cologne, a necklace, bangle. Enjoy yourself. Okay, let your hard work pay for itself. Okay, let your hard work pay for itself, or let it pay you for what you've done. Okay, don't just do things, or don't just analyze and trade and watch profits on your MT4 and then just leave it there for the market to reverse and take it back. When you close your trades in profit, withdraw some money and go and enjoy yourself. That will take care of your psychology. You will be in a much better position to trade when you come back to place another trade. Okay, so I would really withdraw profit if I was to learn to trade again, because there are some times when I would float $1,000, $2,000, and I would say, okay, let me leave it there, I'll come back next week and then I'll trade it again. What would happen is that the next week maybe the trades would go and reverse against me, and then I end up losing half of my profits or even wipe them all off. So I used to regret that. I would ask myself, why wouldn't I take the $1,000 or $2,000, and then I end up taking only $200 out of the market because I was not happy to take the profit out of market and go and enjoy myself. So learn to withdraw your profits. The fifth thing and the final thing that I would do if I was to learn how to trade again is I would not look at other traders' lifestyles. Don't look at the lifestyle of other traders. Live your own lifestyle. Live a lifestyle that you can afford. Do not push yourself beyond the limits of your lifestyle. Please live within the means that you can afford. Do not look at other people. Take your steps step by step. Learn a strategy. Learn how to trade, and then you will eventually reach the lifestyle that you want, that you deserve, not the lifestyle that other people are living. Okay? Because if you go and shoot for other people's lifestyles, that is when you start getting accidents in the market, and that is when you start over trading, over risking, and messing up your accounts and end up losing in this game of trading. So please, guys, follow these things, and I believe that you will be able to come out victorious and you will emerge profitable in this market. There are many other things that I would have loved to share on here, but those are the main ones that I would really encourage you to follow if you really want to make it in this industry. Well, if this has brought you some value, leave a like, comment, and subscribe to the channel. Until next time, guys, peace and out.